Welcome to another Back and Forth with Becker and Orr. Lots of great topics today. We're going to be talking about a sovereign debt crisis. Is that what we're going to see this time around? You can see that's the lead-off topic, plus midterm elections and having some fun with a lightning round. You definitely want to stick around.
Yeah, we've had to deal with the debt question here in this country as well as the United States and a lot of places around the world. The U.S. midterm elections were done yesterday. Have we solved anything? We will find out as we go forward. But if you want to know more about this or any of our others, please go to our YouTube channel and subscribe. Great content there. You'll love everything we have on it financially as well as our back and forths. Also, like us on Facebook, and most importantly, visit our website at beckerorr.com. There is blogs, there is events, there is YouTube videos, and also us on Global Now and Then as well. So these are the things to take a look at. Today, we want to deal with, to start, sovereign debt. Clint, what are we talking about with sovereign debt, and what has happened this year to the sovereign debt we have?
We got to lay the foundation here. So typically, sovereign debt, that's the country debt. So the the government of Canada, the government of the U.S., governments throughout Europe, that would be the sovereign debt, their level of debt. This would differ from example, say, corporate debt that corporations will put into the market. And usually, Kevin, if you see a bit of a pull down, a bit of an issue there, some of the risky corporations, what we call high yield debt, they get creamed and your government debt does better. That's normally the trend. This time around, I'll pull this up from Willie Delwich All-Star Charts. The exact opposite. The orange there is the high yield debt, essentially. And you can see back in 08, a big drop. And then this year to date, there is a drop, although nowhere near the size of what we had in 08. And then the sovereign debt, this is the U.S. government 20-year treasury, the blue line at the top. You can see 08 near the front of the chart, a little dip. And then look at where we are now, minus 42, a significant drawdown, almost 3 times the size of what happened to the high yield numbers. What's going on, Kevin? What's going on with the sovereign debt?
Well, again, it's a variety of different factors that we've got going on. I mean, let's face facts. I mean, we haven't had inflation this high in 40 years. Yeah. And the way that you counteract that inflation is, normally you spend less as a government if you can, but you also got to increase interest rates to take money out of the system. Now, back in the 80s when this was happening, I mean, you had inflation at 14%, but you also had interest rates that were closer to 20, not as big a spread. It's a smaller percentage to go up. Here we've gone from basically 0 to almost 4. That's a 400% increase. And basically with that inverse relationship between bonds and interest rates, the faster the interest rates go up, the faster the bond prices fall down. That is a huge factor for what's going on right here, right now, especially when you're dealing with governments.
Yeah, I think that's very much the case, especially for 2 key reasons in my mind. One, we've seen the fastest hiking cycle in about 40 years. They didn't just raise rates a little bit. They just skyrocketed, like you said, from a non-existent to suddenly a significant level, all within about 8-9 months span. And they did that into one of the most heavily indebted situations we've seen, right? The government, remember back in 08, lots of bailouts, and then you had the sovereign debt crisis that followed. It resulted in even more debt. And they never really got away from that. It continued to climb over the decade that followed. And now into that heavily indebted environment, you saw a record level of interest rate increases. That's really been the big issue for the sovereign countries, right? Companies, which would be that orange line on the prior chart, they were far more prudent, far more responsible, and they're actually in pretty good shape. Like they took advantage of the low interest rates to recapitalize. Many of them haven't had to recapitalize in this high interest rate environment, so they're holding up much better than the government debt. And I think that's really the key issue here. This is a different environment than what we've seen in the past.
Yeah, you're correct exactly with that one. Beforehand in 08 and 09, it was all the companies that they were in big debt problems, and you had to worry about it. So, of course, their debt spreads equated as large. Well, as you said, government funding there, government funding during the pandemic, none of that's really been recuperated yet. So now it's on the opposite end. Corporations in good shape, government with large debts that they now have to pay even more money on. So again, that's going to be a rationale for why it is. Do we think it's going to stay there forever? Hard to say that it's going to stay there forever. I think when you get rates to stop rising and or you get a little bit of a correction, you'll get some bounce that's going to be fairly significant. But in the short term, it is definitely painful for us to see.
It is. It's absolutely is. We got to move on. Let's talk midterms.
Yes.
Kevin, we're recording this on Wednesday. The midterm elections took place yesterday, Tuesday, but they're not finalized. There's still some very close races. We could even see a runoff in some cases, which means it could spill over into end of November, beginning of December before we really know the results. I'm going to throw this to you. Once it's done, once we know the answer, will the markets care who wins?
Actually, I don't think they will. And I think we've seen that since World War II, basically, whether you've gotten in with the changeover where there's gridlock that goes on in Congress or not, a year down the road, you've always seen a positive return. Now, some of them are very small. Some of them are incredibly large. But again, I think what this leads to is that once we find out the results, there is a term of certainty that is going to be there in the markets for the next 2 years. People know what their government's going to look like. Is it gridlock? Is it going to be that you're going to be able to pass things? Is there going to be bipartisanship or any of that? That gives people a lot more security to say, okay, I know how my government's running for 2 years. I can get back and doing the things that I do. I don't have that worry. That volatility starts to shrink a little bit more going forward. So that would be a lot of what the midterms, I think, will have to deal with.
Yeah, it takes one of the uncertainties off the table, right? If we end up in a similar situation when Democrats have control, well, we already had 2 years of that. Companies know what to expect going forward. If it's gridlock, well, not a lot's going to happen. So we know what to expect going forward from there as well. So it allows you to plan a little better, takes an uncertainty off the table, which is usually a positive for the market. I think that speaks to the results that we've seen since World War II, is that the 6 months, the 12 months after the midterm elections are finalized are usually pretty good for the markets. But let's move on, Kevin, to a fun and fast segment here, the lightning round. We'll get right into it, of course. We got a couple of questions. Do you want to go first? Or do you want me to fire away?
You know what? I'm going to do the first one this time.
You
I'm
go
always
for
searching after you take my questions. So this time I'm going to get them out before you get a chance to. All right. Sticking on that sort of midterm scenario and the way things are looking at the moment, it looks like the entire control of the Senate is going to come down to one race in Georgia in December. Based on what we know, is it going to be Warnock or is it going to be Walker that wins this and either makes it a Democratic Senate or a Republican Senate?
I have no idea. It's a coin flip. They're so close. Like, you look at the polls, you look at the results, it really is going to come down to a handful of votes one way or another. You can flip a coin. You can have Walker on one side, Warnock on the other. I think that's essentially going to be the odds. It'll be a coin flip, and it is going to be a runoff, so we're not going to know probably for a few weeks, likely early December before that's all resolved.
All right. Next question is going to be fairly simple. Tomorrow we're getting U.S. CPI numbers. Are they going to be lower than consensus or higher?
I hope they're lower than consensus. That's what deep down in my soul, that's what I want to happen. So that's what I'm going to say. Lower than consensus. We'll be pleasantly surprised tomorrow. That's
fine. I'm going to give you a real simple one. Now, the Jets have had a phenomenal start. They're first in the Central Division right now. By U.S. Thanksgiving, are they in a playoff spot or not?
That is optimistic. U.S. Thanksgiving. There's a lot of hockey left to play before you actually get to the playoffs.
2 weeks.
All right. U.S. Thanksgiving, I'm going to say yes.
Yes. That's basically the reason for that is because if you're in a playoff spot there, chances are you make the playoffs going forward. And finally, I will take the last one. Starting on Friday, Wakanda Forever opens, the new Marvel film. Do they do over or under 125 million opening weekend?
Oh, I think it's going to be over. I think people are back and going out. People are enjoying it. You've seen a burst of spending in services and travel. And this is probably going to be a big movie. Is it going to be a good movie? I have no idea, but I think it's going to have a lot of initial attraction. So I think that big opening weekend is probably a guarantee for Avatar 2.
Okay, sounds good. I'm set.
All righty, let's go for it. I got a couple of them loaded up for you here. The first one, Bank of Canada. We're talking rate hikes. December 7th is the next rate hike. I'm saying hikes. I'm very confident it's going up on December 7th, but by how much are they going to raise?
I was going to ask that question myself, but I failed off on it. So I am actually going to go that the Bank of Canada, I think they are going up 1/4 of a point. Now, again, this will all depend on what our CPI is, but I honestly believe after doing 1/2 the last time, doing another 1/4 this time, that'll get you to 4. I think that's sort of starting to do things there. I'm going 1/4 point, December 7th.
Yeah. So you talk CPI, that for the U.S. comes out right away. Canadian CPI November 16th. The current is 6.9%. The headline, the current core CPI 5.4%. November 16th, higher or lower for those numbers?
Ooh. Well, for the Americans, I'm going, and I'm in the same boat. I'm going lower. I'm hoping for that scenario. And for the Canadians, I'm going lower as well. I don't think they're going to be dramatically lower. It may even hit consensus, but I'm going on the low end. We've missed twice in a row beforehand, even though it's been coming down. So I think now we hit.
Okay, there we go. There we go. Guaranteed here from Kevin Becker.
Yeah, right.
We'll end with a fun one here. We're talking Elon Musk. Of course, the Twitter drama has been never ending, it seems. Where first he's going to buy it, he's not going to buy it, it's going to go to court. Then he says, hey, I'm going to buy it anyway. Then all the advertisers leave. Let's talk Elon Musk and Donald Trump. Do you think Donald Trump actually ends up back on Twitter?
Oh, wow. That's something to look at for sure. No, I don't think that Elon's going to let him on. As much as I think he wants more of that free speech scenario, I think that he likes being the center of attention just as much as Donald does. If he lets Donald back on, Elon gets pushed back to the sideline, and he doesn't want that. So no Donald Trump. Okay, there we go. Controversial opinion. I love it. Well, if you have more questions for us, whether it's on Twitter, Elon Musk, or even a financial question, we'd absolutely love to hear from you. You can always visit us, chatwithclintonandkevin.com, go to the webpage, fill in the form. It comes right to us, and we'll get back to you as soon as we can. Any parting comments for the folks, Kevin? No, it's just that we'll always end on an Elon Musk quote if we can. That's about it for now. That works. Take care, everybody.